Hi, good morning. This is Marty Macisso with MartyMyRealtor.com. Today I'm going to do a little actual market analysis, a little bit different, not specific to short sales or distressed properties or anything like that. Um, so this is relative to South Portland, Maine, which the data is based on sales over the past 2 years. And I'm going to do a little bit of a comparison about, kind of the trends and what's happening in the real estate market today relative to last year and even the year before. Basically, the numbers aren't pretty when you look at them. Obviously, if you read the news and whatnot, housing is pretty weak right now. Numbers as far as total sales year over year are down 25%, and the values are down 20%. So when you hear that, you're not thinking that this is a strong real estate market at all. Depending on who you talk to, it's not necessarily true. Certainly, there are absolutely things to be worried about with the overall economy, and there are also a lot of bright spots to focus on too. But when you break it down, month over month, the real estate depreciation is only 1.6%. Now, when you put that in perspective, the stock market lost an overall value in 3 weeks from this past late July to mid-August. The market crashed 20%. So that was money and wealth and equity disappearing like that. Whereas the real estate market, it's kind of liquidating. Picture it as going out of business sale. It's a wrong way to put it, but distressed properties have to sell. You've got a lot of foreclosures, short sales out there. It's certainly dragging values down. But when you look at this last year, you need to realize exactly a year ago, last September, was the end of the homebuyer tax credit. So that was a complete government manipulation of real estate activity. So when you stack it up, well, of course, sales are going to drop when the incentive isn't as powerful as it was last year with that $8,000 tax credit. So having said that, 1.6% a month, that's really not an apocalyptic percentage. So let's focus on the good side of this. Right now, if you haven't been a victim of the economy, you lost your job, and you're in a position where you've had a couple years of employment, even with marginal credit, you can get a 30-year fixed rate between 4.5% and 5%, which is crazy low. Rental costs are going up. So as a buyer on the fence, there's uncertainty in the economy, and I appreciate that. That's definitely something to worry about. However, to lock in a very, very low housing payment, that's something you need to consider, no matter what the future may hold. Other benefits to real estate ownership are tax shelters. You can write off property taxes, mortgage interest, and overall, you've got a capital gains free tax if you buy now and the market recovers in 5 years. You could sell your property, and that's, if there is money that's been made over that time, that's non-taxable. And I don't need to talk to real estate investors. The real estate investors are beating my phone down because there are so many cheap properties out there because of a lot of distress situations. And of course, buying and holding, that's where a lot of the smart money is going right now, into rentals and commercial properties and even multi-units, which are 1 through 4 units. A lot of the money's coming out of the stock market because of uncertainty, because bonds are not giving you any real rate of return, and actually it's negative when you factor in inflation. So owning multi-units is actually a good place to hide your money and still get some cash flow, and you can write depreciation off, and it's a good way to shelter your money. So that's kind of a little bit of perspective on the city of South Portland, Maine, and really Cumberland County, Maine, and overall Maine, because South Portland's a good reflection of the economy in southern Maine. So that's a lot of info. Hopefully that makes sense to some of you out there. Any other questions, shoot me an email. And it's been good talking to you about real estate.